Hopefully you can see my screen. Just turn around. Yep. Okay. Markets are actually in a state of collapse at the moment. Literally, as Anna was talking, this is the 15-second chart. Bang, 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 bang. And that's come right out of the blue. I'm just looking around for news. I was just going to check on Forex, talking Forex. Massive move, big volatility all over the place. Absolute ton of volume come in. That's the volume that come in on that particular candle. This is a 2-minute chart. This is on the NQ. I've got the NQ up. This is what's going on in terms of the VIX. The VIX has absolutely spiked. It was going nowhere. And then suddenly it's gone bang, out of the blue. It's gone up point and a half.
I think everyone's been caught blindsided. Don't twist that.
Let's just go on to the tick charts. This will be interesting. Tick charts indices, there we go. Really quick move. That's where all the, we went green there. That's where all the volume came in over the last few minutes. Tick charts would have gone berserk. You can see the speed they're moving at. Just change these over. This is 377 tick now. In fact, it's gone up again. It's 987 tick now. This is on, I'll put this up to 818. There we go. And over onto this one at, I'll put that up 1152. Take off the actual. There we go. Sorry. Butterfingers. Yeah, sorry. Yeah, it's okay. Apologies. Trying to do it too quickly. Okay, where are we? Slowing down again now. Now we're back to these numbers I'm pulling off here, by the way. We're now seeing the reversal come in, which is no great surprise. The VIX is dropping. Let me just get these back to normal again. I'll set that at 377 tick. Bang, up we go. Nice trap move. Money making. 1597. There we go. Bang. Okay, let's go back on. Let's go to the Renko. Let's go to the bricks. There we are. There we go. That's what's going on in Renko. Really, really solid move. But if we go back to the time-based charts, what Anna was talking about earlier. Where are we? There we go. There we go. That's the power of the volatility indicator. Bang.
Oh, I tell you what it's at. Right.
You're expecting it. It's reversing. Yeah, what is it? Yeah.
Just tweeted, he says markets come under pressure in midday trade on FT report that Gilead's remdesivir is a flop.
Hold on a minute. I'll just pass you over to Anna. She can just do that on air.
You okay? I was just, can you hear me? Oh, right. Yeah, sorry. I've literally just came through my Twitter feed. Apparently, there's a Financial Times report to say that the drug remdesivir, which is the Ebola drug, isn't it? Yeah. They've been trialing it for coronavirus, and in inverted commas, the clinical trial has flopped. If you remember, I think it was last time we were here, you know, the market shot up, and I actually pulled up the Gilead. There'd been a kind of leak that to say that it was showing a lot of promise, and markets, and I said at the time, markets are going to be driven by what's happening on the medical side, and we've had the exact opposite now with this report coming out saying that you know, sadly, it's not as effective as they had originally thought. So who knows? Anyway, I think that's the reason for that.
There we go. And it's just a great opportunity for the insiders, the market makers, to make an absolute ton of money. Chop traders off at their knees. Stocks would have been taken out like going out of fashion. Their cash register would be ringing. and now looking for the reversal to kick in. Let's just stay with that for a minute. In fact, let me go to the other charts as well. Let me go to, this is what's happening across all three. This is the YM, the NQ, and the ES, just to get a perspective on it. I'm sure they're all doing the same sort of thing, which they are. Top line is 5 minute, bottom line is on the dailies. And the market has been weak. It's not been a strong market. In fact, just gonna have a quick look at gold. Just want to see what's going on in gold. Okay, it hasn't come off much. Okay.
Well, Gilead shares have fallen.
Yeah. All right, there we go.
$12.
Okay, and now what we're seeing is the importance of support and resistance coming into play, just the technical perspective angle. Huge long-legged doji, massive volatility, absolute ton of volume here. If this market is going to fall, it's got to get through these levels, certainly as far as the YM on the Dow 30 is concerned. So you've got a nice, very strong platform of support which could come into play. It was certainly touched when the volatility was triggered. If the market's going to continue lower to the downside, what's the VIX doing? It's trading sideways for now. It's ticking up, starting to tick higher. If the market's going to break through this region, then it's got to break through this technical region. And if it breaks through that level, we're down into very low volume in terms of volume point of control. And then we've got a nice ceiling of support overhead, a resistance overhead, if that is breached as a support platform. You've got pretty much the same thing going on in terms of the NQ. It's one of the reasons I always have these three up together, because it gives you a different perspective. You've got a cluster of two here, very strong. Volume on the volume point of control is heavier, but nevertheless, you've still got a technical level that's got to be breached there. And the same up on the ES. Again, you've got a cluster of two very, very strong areas of acting as support at the moment. It's already back to support there. And the beauty of the indicator, the accumulation distribution indicator, is the thicker the line, it tells you instantly. You can see how important these levels are. They're much less important. They have much less significance because they are much thinner. This one has only been tested once. This one has only been tested once. You get the little number alongside. These two have been tested 3 times. This one's been tested twice. These have been tested multiple times. That's why they're thicker. And when you get clusters of them together like this, where you've got 2 strong regions in their own right, but they're acting as a cluster, that is going to act as either a very strong area of resistance or a very strong area of support. An absolute monster amount of volume come in. Now what we have to wait for is the market to settle, to give us some direction, to break free from this volatility region, and then we can start trading again. If we've got taken out in it, fine, our stop's been triggered, that's what it's there for. You've lost some money, but you'd rather lose a bit of money up here rather than this lot down here. Simple as that. Now what you're looking for is the re-entry. Sorry, darling?
Sorry, I was going to say, this is all kicking off on Gilead. Apparently, they warned that the draft document posted was accidentally looking to WHO inside the post.
Hold on, pass you back to Anna again. It's all rumour and gossip and the usual stuff. Okay. Now it's a question of waiting and being patient. Deciding at what level you want to get in. The volume point of control is in evidence on all 3. So we're trading there. We've got to wait for a region that we're comfortable with in getting back into this market. Another big tail to the downside on that particular candle. That will suggest there's a ton of buying in here. This also suggests a lot of buying in here. So in terms of a move to the upside, that's what you're looking for at the moment. Certainly the VIX is ticking lower. Let's just go on to the single chart with the NQ. Get the faster time frames there. There we go. Nice move on the 15-second. If that is your preferred, it's a really nice move. The trend monitor's transitioned through. We're going up steadily. We've gone through the volume point of control. Obviously, you're conscious of the fact we're trading in very volatile markets, but if you're happy trading, this is 30 points here. That's a nice payday, I can assure you, on the NQ. But if you're comfortable trading on the faster time frames, that's fine. What have we got ahead? Quite interesting, shaping up nicely. But remember, this is 15 seconds, but it could be a minute, could be an hour, could be a day. It doesn't make any difference. And it could be any market. If we're moving to the upside and a break away from here, then we want to see some decent volume pushing this higher. Once we get to this level of 87.20, if we get that far, then it should be pretty smooth through there because the volume is pretty lightweight. And on up to this level here at 87.60, where we've got this very strong area, once again, of resistance coming into play. So it's back to support and resistance, the accumulation distribution indicator again. So that's pretty solid up there. So in terms of taking a trade, what you'd be looking for is, first of all, a decent move from this volume point of control. So 87.20 would be a reasonable level to consider. If you're going to jump at an 87.20, you've got a decent catch here of maybe 30 points before you run into slightly higher volume, which is probably of less concern. But certainly this area here would give you your capping limit. It would suggest how far the trading opportunity would take you before you run into areas of potential difficulty on the chart. And that's the way to do it. And it doesn't matter whether it's a 15-second chart or a 15-minute chart or whatever it is. It's a question of looking at the chart. You then go down to the slower time frames. Just reload that one. You then go down to the slower time frames, and you'd want to be looking at, well, what have I got in the way here? If I'm going to be trading over on 15-second or a 1-minute chart, what's happening on my 2-minute chart? Again, you've got a decent level of potential resistance. That's pretty close. As you can see, the little wick where my cursor is, that's already been tested by this current candle. So it's already coming into play. And if you're taking the trade on the 15-second and looking at this, then what is going on in terms of 2-minute is you've got rising volume as the market battles through. So you've got quite a lot of volume here. And remember always that whatever goes on in the slower time frame is going to be more significant and carry more weight than what goes on in a faster time frame. So if you've got heavy resistance on a 5-minute chart and you're trading the 1-minute chart with resistance, then I can assure you the 5-minute chart is going to carry more weight than the 1-minute, because that is a factor of time. Time is all important. It has that significant aspect to it that whatever happens, the slower it happens, the greater that weight carries in the market. And that's a universal truth in trading. It doesn't matter what you're trading or what technical aspect you're looking at, that is common to everything. So the slower the chart, the more pronounced, the more significant will be that aspect of the analysis. And it's another reason why you always use multiple time frame analysis. We go up to the 5-minute. With this very strong cluster here, which was acting as support. It was tested, breach minor there, but it was good enough to act as support platform. We're now coming up to test this. Going back to what I was saying about the 15-second chart, in terms of the 5-minute chart, slightly different because we've got volume falling away here. So if we're going from 87.20 or 30 up to 60, you're actually moving into a region where volume is falling away. So it should be a little bit easier. That said, there's an awful lot of volume here up to 87.40, which may well influence your decision down on the 15-second chart. And that's what you have to do the whole time. It's a question of flip-flopping back and forth, finding your levels, finding what you're comfortable with, how wide you're going to put your stop loss, where are you going to put your stop loss, what's going on in terms of the slower time frames, and is the amount of money I'm proposing to risk on this trade, does the chart deliver enough for me to be comfortable? This is setting up to a nice little channel, classic little congestion phase. You've got the volume point of control below. You've got a little support platform in place here. You've got a little resistance channel above. So you're in a nice channel with a floor and a ceiling. Trading in a narrow range. You want to see it pop through there and out the other side and then off to the races. This is the trend monitor. It's just giving you that heads up. It's transitioning where weakness is appearing, but it's not transitioning into full-blown reversal. It's not going to red, in other words. It's not even going to dark red. It's just oscillating between, yes, I'm bullish, not sure, yes, I'm back bullish, not sure. It's just waiting for this area to break through, and it's It's how to use the indicator, because what it does is it helps to keep you in. Once you're in a position, you've maybe jumped in here, you've got some profit in the bank, this congestion is causing you stress. And what the trend monitor will do is help you manage that stress by giving you a signal as to whether this is indeed a change in trend. In other words, we're going bearish, or is it just flip-flopping around in congestion and it just goes to the darker colors without transitioning through into the bright red. Still got the bearish sentiment here. And what will happen is that this will change. If this is a change in trend and we're back into bullish trend, then ultimately what you'll see is you'll see this trickle through in here. You'll see this change color to maybe a darker color, and ultimately it will ripple through to the 5-minute, down to the 10-minute, and on down to the 15-minute, and so on and so forth. Okay, this was our 15-second chart. Oops, sorry. Let's just pop that back down there. There we go. So we're now starting to break away, which is nice. Decent volume there, you can see, under that candle. Now we're moving up into this low volume region. It'll be interesting to see how much it struggles, if it's going to struggle there, or whether it's actually going to try and attempt to move through there reasonably quickly. Bear in mind that on the 2-minute, okay, that's fine. We've got decent volume, nice candle, no great wicks. We've also broken through this level here. So that's now going to give us a little bit of support if there's any pullback. And remember, this is all coming off this sudden, literally out of the blue volatility, bang, down onto the volatility indicator, trap everybody, frighten the life out of everybody, and now we're going to transition back up again. You can see it acting here, the support is literally coming into play as I'm speaking. That's my cursor there, that's where the support level is. We've got a decreasing volume as we move up into the 30-35 area. So the volume is falling and then it starts to pick up again. So through 30 and 35 should be relatively straightforward as long as the volume supports. Struggling a little bit. See what's going on 15, just keep an eye on the other time frames. Okay, we're building a minor resistance here. Relatively light, but nevertheless, if it's tested again, then it'll grow stronger. It's a bit like Pinocchio with, not Pinocchio. Oh, who was the one with spinach? Someone help me out. Who? Who ate spinach to grow stronger? Popeye. Thank you. Not Pinocchio. Popeye. I knew it began with a P. That's what these lines are like. The more they're tested, the stronger they get. Just pull the Renko over, the S&P over. This is on 1 minute, 3 minute, 10 minute, 15, 20, and the daily. And that's why we've seen the rally so far, because this was the VIX rising and then it fell the last, or it has been falling the last couple of days. And if you're trading long, you want to see this ticking lower. You want to see the trend monitor in exactly the same way. This is on Trading View. You want to see the trend monitor transition through into red as it is here. You want to see it transitioning through here. You want to see it transitioning through into the 10 ultimately, if you're going to be staying in that long. Okay, let's have a look at that. There's a bit of weakness come in there. Just make that a little bit bigger. There we are. Makes it a bit easier. Bit of weakness there. Markets tried to rally. Decent volume under that candle. So there's definite weakness here. We know there's weakness because we've got resistance ahead, but it's also confirmed with this candle here. So we're looking a little bit toppy at the moment. Going to have another run at it. Failed again. Maybe have another try. And this is the volume that this is the volume that's running into on the 2 minute. As I highlighted, it's it's got to find some energy to get through that, and it's not really finding it. We've got resistance, we've got decent volume in there, which is going to come into play. And on the 5 minute, we're trading around the volume point of control. So we expect to see congestion building now. We're not expecting the market to rush up. Probably going to trade around that level. And that's the reason why, because we've got the volume point of control, which is the fulcrum of the market. It's the point at which price is in equilibrium, because the two weights on the seesaw, if you imagine it as a seesaw with two people of equal weighting on it, then those two people are of equal weight, and therefore the seesaw does not move one way or the other. It's in equilibrium, and that's the principle. Price agreement, to use market profile terminology, has been reached. There is no strong bullish or bearish sentiment to drive it one way or the other. When there is, that will be signaled with volume, and the market will break away. And then you're back to looking at your support and resistance levels, the volume on the volume point of control histogram, and how far that market is likely to travel before it pauses yet again. Just want to show you something on oil. I'll have a look at gold as well. Let's hop in on gold. Very bullish on gold. Did a post on that today, I think. Was it yesterday? I can't remember now. And the key thing with the gold chart is very much the buying that we saw day before yesterday. We had higher volume here. If you use this as a benchmark candle and say, well, that's my benchmark, so we had a decent down day there on that particular level of volume, then we get this much narrower spread candle. Market tried to fall, had a decent wick to the lower body, higher volume, trying to rally. So there's buying coming in here, and that's what we're seeing at the moment. It's still a little bit patchy. It's not terribly strong, but the sentiment remains very bullish. And just to make the point on the trend monitor here, you can see it's unfazed by this minor pullback. It's still saying that the market is bullish. And if we can get back to 1780 or 1790 and through to 1800, then the market should actually take off, because we're into light volume, certainly on the daily chart at any rate for oil, for gold rather. In terms of oil, we had negative oil prices on the prior month contract. We're now trading the June contract. I just popped the daily chart up. That's what's been going on. Again, what's interesting obviously about oil is oil, and say, in the market, in the spot market, can it go to zero? Well, it's getting down to $5, $6, $7 a barrel down here. Massive amount of volume came in, a volatility trigger on the daily, which is unusual. What you're looking for is a reversal, which is what we're getting. So traders will have been buying oil, and we're now trading back up to 1684. It's a great opportunity. And when you see those sorts of triggers come in on the daily, and it goes back to the point I was making earlier on, that whatever happens on a slower time frame chart will carry greater weight than whatever is going on in the faster time frames. So when you see these daily, and even on the weekly you get them occasionally, they are massively strong signals of potential reversals, or at the very least congestion coming into the market. So that's what's happening on oil right now. Let's go on to the 3 minute there. Got some buying coming in here. We've had this rollover. And again, it's back to levels. It's back to what the volume is doing. We're up at the VPOC, we're trading there. Then we get the breakaway. We get this nice price waterfall. What's happened? It's confirmed with volume. We get the initial one here. We get a little 2-bar reversal. Then we get the wider spread. Then we get the wider spread candle still, ton of volume. Then we get the follow through candle. Then we get the buying coming in. Because if you look at the volume of these two bars, this candle represented that amount of volume. This candle represented almost the same amount of volume. Therefore, this must be buying, and you're expecting the market to rally from there, which is exactly what it's doing. It's like reading a piece of music. It flows along. You read it bar by bar, groups of bars, groups of candles, and it talks to you, and it tells you the most important and valuable piece of information that you want to know as a trader, which is this: what is going to happen next, or what is likely to happen next.
Right, do you want to stop now?
Yeah, I'm just going back to the indices, see where we are. Interesting, still trading around that level. Let's see if it's going to break through before we wrap up. There we go. Nice. Sorry? 22 we're up to.
Where am I? Oh, it's going to try and get back to R4, which is 23,750. Are you on the NASDAQ one?
Yeah, I'm on the NASDAQ. Yeah.
Yeah, I'm going to go sideways now.
There we go. See if it can hop up a bit. And up onto the 2 minute. Bit less dramatic. Resistance overhead, lots of volume here. So it's, it's going to need some decent volume to break through all that. But nevertheless, you can see the trend monitor. It's transitioned through into blue. So it went through the two transitionals, bright red, dark blue, out the other side into bright blue. So we're into bullish territory, which is confirmed on the 15-second chart, through onto the 2 minute chart. Hasn't changed on the 5 minute chart. You wouldn't expect it to yet, but it's just giving that clue that this is starting to flow through into the slightly slower timeframes. And all that volatility has now dissipated, and we're now trading in much calmer waters where everything is back to, I say inverted commas, normal. And we're ticking up here with nice little groups of points, which is not too bad at all. Very healthy, thank you very much. That's a nice pot of gold in there. Lovely jubbly. And on up we go into low volume territory up here. So we want to see that push through there. And the VIX is ticking down a little bit, so that's helping us as well, giving us a little bit of extra comfort. There we are, we just want to see this come down here somewhere, down to 39.50 would be nice. Tick down, keep on going. And that just tells us that the sentiment of the market has now changed once again after that volatility. In fact, let's have a quick look at see what the indices, not the indices, the currency charts are doing in terms of the yen, because I isolated them out in the currency array. There we go.
Mike Patterson said, feel the flow.
Feel the flow, says Mike Patterson. If you know Mike Patterson, he's lovely.
Feel the flow.
Feel the flow. And that's what it's about. It's about flow. And you'll see it reflected everywhere. Levels and flow. Levels and flow. You'll see it reflected in the yen, obviously, in terms of risk sentiment, risk on, risk off. And these will all start to group together if we're back into risk on territory, because they will have slumped and now recovering in terms of yen selling. All good and dandy stuff. And you should enjoy your trading. If you don't enjoy your trading, then maybe it's not for you, but you should enjoy it. And you do have to learn how to lose. It's a truism. It's one we always repeat. You have to learn how to lose. And once you've learned that, then you can carry on and you'll be happy in your trading, because you've squared that box away, if you like, and you've put it in a corner, and yep, okay, I can accept that. I've got to make a profit in this business. I have to make losses, and that's just part and parcel of it. And you just accept the loss and move on. You can wait for the next one to arrive, and the next one. That's it. We are going to wrap up there. It's a beautiful day here. I hope it's beautiful where you are too. Very quickly, just to give you a heads up on where you can find all the information we've been talking about. You can find all the indicators over here at quantumtrading.com for MT45, for NinjaTrader 7.8, and for TradingView. Working on TradeStation at the moment. There's two platforms coming. That's TradeStation 9.5, which is basically TradeStation driven by interactive brokers. So if you have an interactive brokers account, you can hook it up to TradeStation and have the advantage of running through IB, trading through TradeStation. It's a fantastic combination. So the indicators we're working on will be developed there for that platform. And then we have the TradeStation Securities, which is running on version 10. Again, we'll have all the indicators there also. That should be available in the next couple of months or so. This is Anna's site. You can find all the details of all the books. They're all on Amazon, so you can find them all there. And finally, last but not least, the Forex Education Program. I know we've got some students here on the call. That's where you find all the details at quantumtradingeducation.com. And whilst it is Forex specific, a lot of the information in there is really applicable to any market that you trade, the mechanics of trading, understand relational analysis, technical, fundamental, and all the rest of it. So there we go. That's me done, I think. And were there any questions while we were doing?
No, I've done them all.
Okay.
Oh, you can have the email out if you want.
Oh, emails. If you want us to drop us a line, it's anna@annacooling.com. Always have to answer questions, or david@quantumtrading.com. We're always happy to answer questions there for you if you have any that you want to follow up on after the webinar is over. So there we are, hitting that ceiling, had the run up. Now we look as though we may be going into a bit of a reversal. We will see. Hope you've enjoyed today. We are going to run. We're going to have a cup of tea in the garden and sit in the sunshine for 5 minutes. So thanks so much for coming along. I hope you've enjoyed it. Hope you've learned something that maybe you didn't know before. And we will see you again. Enjoy the rest of the trading day. Enjoy Friday. Hope you're all staying safe and well. And we will be back on Tuesday morning next week for the London Forex session. So thanks for now. See you soon and bye for now.